A perfect risk balance, risk reward portfolio in crypto is what I want to talk about. If I was starting over, new to crypto, or lost all my money and starting back, how would I allocate my portfolio? What percentage of what would I put into each individual sector? We know memes, artificial intelligence, utility, DeFi. These are all very hot sectors, but how do I decide what I want to invest in? In this video, I want to break down what percentage of my portfolio I would allocate to each different sector and how that might change over time. We're going to go over all of this and examples and more. But first, I want to welcome you back to Freeman Finance and Crypto, where if it makes money, it makes sense, guys. From the bottom of my heart, I am truly grateful for every single one of you. But if you're not subscribed, please pause the video, hit subscribe, hit that bell notification. Now, let's get into the video, guys. If I was starting over, how would I allocate my portfolio? And the reason I say if I was starting over and not now is because sometimes you invest into smaller portions of your portfolio, but that one token does a 20 or 30x. And so then the pie chart will change from there if you don't sell it all and reallocate. And so that is why my portfolio currently looks a little different. But if I was starting over, this is how I would do it. 40% into something that I consider a store of value. 15% into artificial intelligence. We all know that artificial intelligence is going to be one of the leading narratives for the next 10 years in the entire world, and crypto is not excluded from that. Real world assets, tokenization of everything, and I believe it will be starting with real estate. DeFi, DEX, exchange. We've seen exchange tokens do really well over time, and I think I would want a piece of that. And 10% would be my memes. Guys, this is the crypto casino. Hit that one-arm bandit, pull that slot machine. That is exactly what this portion is. Whenever I do any investing in this, I know that I can lose it all, and I never invest more than I can comfortably afford to lose. But when it comes to this meme sector, I assume I've lost it all because it's something that can 100x or it can 100% negative and go to absolutely zero. So when I break it down, this is the 5 different sectors that I break it down into. And let's start with the first, store of value at 40%. One of them would be a Bitcoin. This is not personally one that I am allocated to, but there's only 2 in this sector that I would go with. And how I define store of value is something that I believe could really be a transfer of a payment. You know, I could see somebody buying a car with Bitcoin, buying a house with Bitcoin, but it's not there for the day-to-day transactions. It's too slow with one block every 10 minutes, and it is too expensive. And that is where my number one pick for store of value comes from. This is Kaspa, the fastest open source, decentralized, fully scalable layer 1 in the world. It's currently ranked approximately 20th in overall market cap at around $4 billion. It has 10 blocks per second coming soon, whereas Bitcoin is 1 block per 10 minutes. So this is the gold in Bitcoin, and Kaspa is definitely the silver. And moving on to the second tier, I want to talk about artificial intelligence, guys. And remember, none of this is ever financial advice. I'm got slightly a degen and loves finance, so I could be completely wrong, and all these could go to zero. So please don't listen to me, but always do your own research. But artificial intelligence, I do have a pretty good section of it at 15%. And when we really look at this, it is getting kind of crowded in the artificial intelligence sector. And you've got to be really careful because a lot of these say they are artificial intelligence, yet they don't actually do any artificial intelligence on chain. It's kind of like they use the term artificial intelligence to keep people in there. And so my first pick is one that gets fudded a lot, but it is the internet computer. Fully on-chain artificial intelligence. They do not talk about that enough. I have lots of videos on the internet computer, but I really do recommend everyone coming to this website and going to explore capabilities and really get lost in the internet computer. You don't even have to own the internet computer to utilize this platform because of their reverse gas fee model that I talk about. The second one that I would personally consider for my artificial intelligence sector is Render. It's ranked around 40th in overall market cap, the distributed GPU render network. This was really the first one that came out and caught mainstream attention. It had a really good run from like a less than $1 all the way up to like $12. You can see back here at the end of about a year and a half ago, it was 40 cents, 45 cents. And then even at the end of last year, it was barely at $1. And it has shot up to over $12 and now has a really good pullback at less than $6. But we all know artificial intelligence is not going anywhere. The next artificial intelligence I want to talk about is the lowest market cap. So it probably has more risk, but I think it has the absolute most potential. And it's something I'm extremely bullish on. This is Block. Robert Mao is their CEO and founder. They have a lot of different components to this, guys. I really recommend going to watch my videos about it. They have this creator studio that I'm really waiting to be released. You see it says coming soon. Content creator Swiss knife. I, as a content creator, am going to use this and I will update you all with this. This is something that I believe will do very, very well in this up and coming bull run. And when we take a look at ABT, it's all the way down at 227, guys. And this is one I have a video about. I made a major mistake. I bought it at like 20 cents. I sold it at 17 cents. And then it went on this parabolic run that would have been like a, what is that? Like a 80x, 60x up to almost $5. And I deeply, deeply regret that. But that is one that I think has a lot of potential. But we have more sectors in there. And there's one that I weigh a little heavier than artificial intelligence. That is real world assets. I think tokenization of absolutely everything from social securities to birth certificates will come in my lifetime. But I think the first thing with the support of BlackRock, Kathy Woods over at ARK Invest will come with real estate being tokenized. And that's why I allocate 20% to real world asset. And the first one that I do want to consider is Chainlink. It's one of the safer plays, ranked at number 14th in overall market cap. This is the Oracle, as it says, platform for pioneering the future of global markets on chain. So this is how price data from Web 2 gets into Web 3, whether it's housing markets, what the house is sold for, what the comps are. All of that is done via Chainlink. And you will see a lot of these people that we talk about and these projects partner with Chainlink. The next one is Ondo Foundation. They're partnered with some really big names such as BlackRock, Morgan Stanley, Mantle, Injective Curve, Coinbase, Polygon. And this is ranked around 68th in overall market cap, a little under $1 billion. But it really had a good run at the beginning of this year. If we go back, it went from about 8 cents up to well over $1, and it is now around 66 cents with the entire market cooling down. But they are focused on tokenization of everything. And the third one, and the one I'm most bullish on, and it's the lowest in market cap, so it does have inherent more risk, is Proppy. They are focused on real estate tokenization. They have their own marketplace where you can look at listings and everything like that. I really think this has a lot of potential, guys. And when y'all take a look at what I pick, y'all will see that I have a little higher risk tolerance than most people. I do like to invest in these lower market cap projects such as Proppy because I am just here for a big gain and I'm willing to risk it, but not everyone is. So it's very important that everyone understands their risk tolerance. But Proppy is sitting right at $1 at 298th in overall market cap. As you can see, it also had a very great year. It was up to almost $4 and now it's just barely over $1, and it came from around 30 cents less than 1 year ago. So real world assets, I do believe, will be a huge thing in the entire world, but also in this next up and coming bull run. I think that it will bridge over to cryptocurrency, but that tokenization of everything and getting the entire world on chain is coming quicker than we know it. Number 4, in no particular order other than percentage of weight, is exchange or decentralized exchanges. Those are what I am wanting to focus on, primarily DEXs, DEX coins with the DeFi portion of this portfolio. And when I take a look at it, the first one that I want to look at is Radium. It's an excellent platform on Solana. You can set buy orders, limit orders, stop losses, everything from a decentralized exchange. That's the real edge that Solana has over something like Ethereum is Uniswap doesn't have that. It's just very basic, but I really want to hit on some different chains when I do these decentralized exchanges. I really want to bridge it through, and I'm going to list a couple more, and then I will tell you what I am looking for being developed in the future. The second one is Jerome Finance, guys, the leading decentralized exchange on Base. It's really competing with Uniswap Base for volume, and Base is one of the up and coming quickest growing layer 2s built on Ethereum. As you can see, there's 633 million TVL, almost 10 billion in monthly trading. They accrue 17 million in monthly fees and almost 150,000 monthly users. And the next one is on Tron. It's a different type of decentralized marketplace, something that I have not looked into before, but this is a Sun Pump coin. This is their pump.fund. This is their meme creator on Tron, but they have a burn buyback mechanism within this, and this token is doing very, very well. I do not currently have any of it, but I will say that the price is performing very well, and I think it will continue to do so as long as the Tron hype behind those meme coins really goes. As you can see, almost 600 million in TVL, 20 million TVL in stablecoin pools. I mean, guys, this has gotten massive adoption recently since the Tron ecosystem has really taken off. But now it's time to gamble. I'm going to the casino. Meme coins, community driven, absolutely zero inherent value. All they have is community. That is why I love them. I believe they are the most honest of cryptos. They're not lying to you, telling you they're doing artificial intelligence. They're not lying to you, telling you they're doing real world assets. They're telling you the truth. We've got no value. We've got me and you. We are the community. And the first one that I want to look at is not going to be in the top, guys. Again, I have a high risk tolerance, but if I personally wanted to invest up here and had this level of risk tolerance, I would invest in Chainlink. I would invest in Render. I would invest in a utility token that was very high in market cap. But what I believe is the best meme coin of all time, a meme coin made by AI for the people. I am the AMA Spaces host for Turbo, guys. This was made with ChatGPT, a budget of $69 billion. It had a parabolic run 2 months ago, going from less than 0.001 all the way up to 1 penny. It's currently sitting around 204, and I have a lot of belief into Turbo if the bull run continues and the 4-year cycle is not broke. That is my Ethereum play. I now want to branch off to 2 different chains, Solana and Base. You will see this as a common thing in this video. I like Solana, I like Base, I like Ethereum. And whenever it comes to some of these projects, now inherently as a token, I don't like Solana, but some of their meme coins do very well. And the one I want to highlight for them is Ponky. And they have Ponky Swap coming soon, which is going to be really exciting to hear about. But this token has done amazing, guys. It's currently sitting at, I think, around 30 cents. If I had to say any negative on this, it would be the tokenomics. Because when they don't have a lot of tokens in supply, the actual price per token seems high. Now, none of that matters in all actuality. All that matters is market cap. But with them only having 555 million tokens, when it gets up to, like you see, $156 million market cap, it makes people think it's expensive, okay? If there was 10 times the supply right here, then this would be 10 times lower. Now, the overall value wouldn't change at all. This is just a visual thing, a psychological thing that I don't like about Ponky, but that does not stop this thing from performing amazing. As you can see, it was less than 10 cents, at some points 2 cents earlier in the year, and it got all the way up to 70 cents before being rejected at the memest number of 60 cents. Come on, guys. You kind of got to laugh about that. But the next one is a very low cap meme coin. It's one that could completely go to zero, but I am betting big on it. And it is Mr. Miggles, the officially unofficial Coinbase mascot of Base Chain, guys. They're listed on exchanges. They did a liquidity partnership with Jerome Finance. They have an NFT that they actually purchased that collaborates with it. And I think that's a really big thing because when there's NFTs associated with a meme coin, it really allows people to lean into the community, buy a profile picture, have it for your X, for your Twitter, for whatever, have it and really represent the community. And I think we will start seeing that more and more. But when it comes to breaking down my portfolio, that is how I would do it. If I was to start all over, store of value 40%. Artificial intelligence, one of the leading narratives that everyone's already talking about, is 15%. Real world assets, something that nobody is talking about hardly outside of Web3, but that I think is coming, will take up 20%. Decentralized exchanges or DeFi would take up 15%. And when I go to the casino, it's 10% for the memes. Now, like I said, if someone invested in Miggles, such as myself, and Miggles does a 30x, that would now become 30% of my portfolio by itself. So either I accept that new risk or I reallocate to something different. Maybe put some money into Kaspa, put some money into Chainlink or Render or something that's a little more conservative. But guys, let me know. What do you think about this portfolio breakdown? Do you think that is a healthy balance of risk reward? Watch this video up above. And if you're not a part of the Free Men of Finance family, what are we doing? Subscribe. I love you all.